Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about FAME Industries, which is a medium-term gem and looks very good at the moment with the auto industry coming back into focus. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Fame Industries, a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the YouTube or the WhatsApp membership if you can just email me. Now about the company established in 1989, it is into auto components manufacturing and it has expertise which lie in making auto lighting. It boasts of marquee clients and is spread across India and some countries abroad. It also produces rear view mirrors and canisters. So a lot of different products of automobile, especially you can say large vehicles or commercial vehicles that Fame Industry produces. Their clients include Suzuki, Honda, Yamaha, Bajaj, and LML, among others. In terms of numbers, these are June quarter numbers. So market cap is currently is around just under 2000 crores, and the stock has come down from the top. The sales this time around was 445 crores versus 275 crores, which is pretty good. And the profit jumped threefold to around 30 crores versus 11 crores. And currently it is trading at 1.5 times sales, which is not expensive at all. There is high combined, you can say, promoter and institutional holding with 13% free float, which also looks good. So in terms of performance, stock has fallen relentlessly since January of 2018, and last 4 years have been extremely troublesome for most of the automobile, especially auto ancillary companies, with one problem after the other. We had a slowdown in 2018-19, and then we had the pandemic in 2020 and 21, and now we are faced with during the end of the pandemic, we have now been faced with the chip shortage issues, and there are other different kind of supply side issue that the company and most of the companies in the auto ancillary space are facing. So it fell around 75% from the highs of 2018, and in 2020 it dived even further, as we remember, with the markets falling big time. But it has recovered from those lows and has gone up 3x from the lows of 2020, and results are now beginning to show some promise, and results are looking extremely good. This has been the this is the first time that two consecutive quarters have come out with profitability after a long time, and things are looking up now. So why I believe it's a very good 2 year pick is because auto industry is coming back after a 4 years, at least a 4.5 years hiatus, in which the performance of the industry altogether has not been that great. So I'm not saying that the whole auto pack will continue to do well or the industry are going to do extremely well, but I am saying that based on the lower base effect of the last 3-4 years, these companies are set to produce very good year-on-year numbers. So there could be a PE re-rating in the offering, and plus we could have a situation in which price to sales the company could become expensive from where it is trading at the moment at 1.5 times sales. It could easily trade at 3 to 4 times sales. Raw material costs have cooled down, so oil prices from $130 per barrel has come to $90 per barrel. This is going to really help these companies, plus other metal prices and other prices of other commodities have also come down and cooled off from the top of last year. And the chip shortage issue is seems like it is getting resolved, although there are issues at the moment, but in 1 or 2 quarters this should also get resolved completely. So FY24 should be very big for these companies, and that's why I'm banking on a 2 year time horizon in which the company can end up doing pretty well. In terms of technical, there's major long-term support around 1330. Any dips towards 1400 is a buying opportunity. It has broken out from you can say a strong consolidation, and once 1500 1520 is taken out with volumes, this could really go up 25-30%, could go to 1900 1950 extremely quickly. So it may continue to surge. There has been a lot of consolidation and decline over the last 2-3 years. Now I think these kind of stocks are primed for a big move. It looks extremely strong on charts. May consolidate for a few days, but I think it is headed towards 1900 1950 in medium term. So my call on the stock is, if you have it, then hold on to it. And if you really want to buy, I think 1400 would be very good levels to get into it. I think you can expect 60 to 70% upside over the next 2 years. I think that is a very much a possibility from these levels, that we could see levels of 24 2500 over the next 2 years on the stock. And I think the sector is on a cusp of a strong recovery by 2023, mid 23, and all throughout 24. So this was a video on FAM Industries. Please like and subscribe my channel. Hit the bell icon so to get a video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.